Guys, welcome to another video. Yet again, do have some very nice plays to discuss in this video. We have a $50 million market cap company with a very small 3 million share float that did $527 million in revenue in 2023. Right now, they are completely revamping their entire business model to work on achieving profitability. They also just announced they are reducing their workforce by 30%. So after losing $200 million plus each year for the last few years, they're actually very close to breaking even. But if you are enjoying this content, drop a quick like for me on this video. It does really help me out. But this is a very small, tiny $50 million valuation company that has over 4.5 million followers across their social media platforms, as well as influencers, which are partners and coaches. And a lot of these influencers and these partners have over 5 million plus followers across their social media platforms. You can see right here, are partnered and backed by some very famous fitness influencers. But either way, this is a company that has massive revenue capabilities and is chasing profitability, and they are actually proving this on their latest financial statements. So this is one we have to talk about. You have to see this play. We're going to be discussing a penny stock currently trading at the 52-week low, a 74-cent penny stock that is completely backed by an $800 billion company. Just had a very huge update with their contract with Tesla, was actually adjusted with some new terms. So it did have a very big drop. So this is one, like I said, is currently trading at the 52-week low. As of right now, we have to talk about some very key updates that just happened. A 74-cent penny stock with a very small market cap that is doing over $120+ million in revenue each year and is undervalued based off that alone. First thought we do want to talk about is ticker BODI, the Beachbody Company Inc., currently trading at $6.79 with a very small market cap. Actually says 22 million, but the current market cap is sitting around $50 million because it is not updated on OTC markets. Now you can see in 2020 and in 2021 did just under $1 billion in revenue. Keep in mind, you always add 3 zeros to these numbers, but in 2023, the previous year, they did $527 million in revenue and lost $152 million. The year before that, they lost just around $200 million in net income. And the year before that lost $230 million in net income. But they are completely revamping their business model, like I said. And for the last quarter that just came out, they only lost $10 million in net income. The previous quarter before that, the first quarter of 2024, they only lost $14 million. Now, this is compared to losing over $65 million in Q4 of 2023. They are chasing profitability, and they did just have some very big updates, reducing their workforce by 33%. So you can see they have 1.3 million subscribers to their platform. But how do they actually make their money? Well, 46% of their revenue does come from nutrition supplements, which is a very big market to get into. I think this is a $160 billion plus market. So they do sell these through the BODI network, Amazon, and direct to consumer DTC. And 51% of the revenue does come from digital streaming. The monthly, quarterly, semi-annual, and annual membership, a yearly membership price of $179, and then 3% of the revenue does come from this commercial grade stationary bike. So a very small percentage of the revenue does come from that. But looking at some of these metrics right here on the digital side, basically their fitness and digital platform, all these workout programs they have, 9,000 unique streaming videos, 134 streaming programs, and 1.2 million paid subscription. On the nutrition side, which accounts for 46% of their revenue, they do have 150,000 or just over that in paid subscription, with a $118 monthly average order value, which is a pretty big order value for each month for a nutrition brand. Premium fitness content does come with 134 different programs. BODI was ranked the best tested workout app for 2023 by CNN. I actually just pulled up the app on my phone, and it actually has a 4.9 star rating with over or just around 300,000 rating. So actually is getting very good reviews on there. You can see they have a very big market they're in, a $240 billion opportunity in the total addressable market that they are basically addressing. The nutrition supplement side is a very big market. Like I said, a $164 billion market. They just capture a very small percentage of that. They can have, a tremendous amount of success. Are transitioning from an MLM to a single level affiliate program launching on November 1st, 2024. So they are doing a lot of changes with their marketing to help turn around their business starting 1 month from now, November 1st, which is another catalyst, a potential catalyst to look out for to see how that does work out with their new business model. Like I said in the intro, they are partnered with influencers in this industry that do have millions upon millions of followers. You can see most of these have at least 1 million followers, up to 5 million plus followers. And, the company itself does have 4.5 million followers across their social media platforms, according to this presentation. For the next quarter, they are expecting $97 million up to $107 million in revenue, with net loss of $9 million up to $13 million, which is excluding restructuring related charges of approximately $9 to $11 million and the potential for goodwill impairment that is being evaluated as part of the company's third quarter close. So they do have some stuff going on with that. And one thing I did want to mention before I go to the next ticker, when their last financials came out, they were really focusing on the $164 billion nutrition market, which represents an opportunity more than 12 times larger than the $13 billion fitness market. So nutrition was once an $800 million product line for them, more than double our fitness offerings at the time, implementing multiple new strategies to recapture a significant portion of the nutrition market, like I said, which is a very massive opportunity. Nutrition market is one the company knows extremely well. They're currently trading at a $48 million valuation, a very small market cap, under $50 million, with this massive revenue capability, which, is probably going to go down as they do this turnaround strategy. But either way, guys, massive revenue capabilities. Looking at their balance sheet, they do have $36.6 million in cash, $245 million in total assets compared to $178 million in total liabilities. Looks like $20 million of that is long-term debt, so not a very large portion of that is. So just currently trading at $6.79, did actually spike up 26% today, is up 1% in after hours. Strong resistance just around the $6.90 level, just around $7. So that is a key level to break. But like I said, it really just comes down to their next few quarters and how this turnaround strategy continues to play out. So all I have with ticker BODI, I'm going to go to the next ticker now. I'm not going to go too deep into this one because I literally just started looking at it. It's ticker LVO, ticker LiveOne Inc., which did have a massive update as they did announce a renewed partnership with Tesla throughout May 2026. Now I'm going to briefly tell you what happened and what is going on with ticker LVO. Ticker LVO is this tiny $70 million company that has produced over 120 or just around $120 million in revenue for 2024, for fiscal year 2024, and lost $12 million. But the most recent quarter, they almost broke even, only lost $1.2 million or just under that. Keep in mind, you always have 3 zeros to these numbers, but they had $33 million in revenue just the last quarter, which was consistent improvement quarter over quarter. But just yesterday, the day after I made that video, they did have some changes with their long-term 10-year plus agreement. There's a massive long-term agreement they have with Tesla. They did announce this renewed partnership with Tesla throughout May 2026 with some new terms. Just so you know, their previous agreement with Tesla governs their music streaming services to their car user base in North America, including their audio music streaming services. So basically each new car, a lot of these new cars, most of their models sold in the US would come with this paid membership to LVO's music streaming platform. This premium membership was completely paid for by Tesla, and as of December 1st, so starting on December 1st, 2024, in 2 months, Tesla will no longer subsidize LiveOne products to some of its customers, meaning basically Tesla would pay for this membership, so these new car owners would get this for free, and this revenue would go directly to ticker LVO. So however, starting on December 1st, LiveOne will offer all Tesla customers discounted LiveOne music packages. So instead of paying for this membership for most of these cars sold in the US, now they, basically they will offer LiveOne's membership at a discounted price, which is seen as negative because they are lowering their fiscal year 2025 revenue forecast by around $30 million. So basically now they changed their 2025 forecast to $120 million up to $135 million in revenue, which is still more than their previous $118 million of revenue they did for fiscal year 2024. Before this agreement was changed and any of these terms were changed, they did have a $140 to $155 million revenue forecast for 2025 for that entire year. Keep in mind their fiscal year does end on March 31st, so they do have a weird fiscal year setup. So their first quarter will be basically the next quarter that comes out will be the first quarter of fiscal year 2025. Are reaffirming a $12 million buyback program, officially retires 4.2 million shares, reducing the outstanding share count to 94 million shares. That was positive, but overall this PR was negative, and we really won't see how it plays out until basically they don't start this until December 1st. So we have to wait until a full quarter after this is actually started to see how this actually affects their revenue and membership. Basically at the end of the year in 2023, ticker LVO had 3.5 million total subscribers to their membership streaming services, and this increased to 3.9 million subscribers just in August of this year. So they are growing very aggressively, and something that Tesla said in this PR is that Tesla will continue to pay LiveOne monthly for grandfathered users in perpetuity. So this is very important and positive because it means that Tesla will continue to pay ticker LVO monthly for all of the subscribers that they previously paid for up until this date, and there is no deadline because they said in perpetuity, meaning they will continue to do this forever. And considering Tesla does account for around 50% of their revenue and could basically account for around 2 million out of their total 4 million membership subscribers, this is actually very positive as long as they don't come in and make any changes to it. So as of December 1st, we will have to see how this plays out and affects their revenue. Wait for a full quarter after that to really see the impact, but that's the update with ticker LVO. That you can see this one did have a massive sell-off based off of that PR just yesterday and did break through that key support level and is currently trading at the 52-week low of 75 cents, but this still is a $70 million company that is doing way more revenue than their market cap. Looking at their balance sheet, do have $6 million in cash, $64 million in total assets compared to $70 million or just under that in total liabilities. So this is still one to watch at the 52-week low. Just really have to see how their revenue is fully impacted by this agreement and how that does play out. But that is all I have for today's video. Let me know in the comments what other plays you're watching, what do you think of these plays, and I will see you on the next one.